Hey everyone, it's Michael from Stocks Toolbox. I'm going to show you what I'm looking at for tomorrow, November 5th. I had one position close on Friday. It was PUMP. If we click on the strategy name, we'll be taken to the full backtest report, and we can see the average trade for PUMP in this setup has about a 2.3% return and nearly an 83% win rate. That's a very high win rate, which helps me get over the small number of trades at just 11 occurrences. Clicking the symbol link at the top, we can see the day this screen triggered on PUMP was October 30th. This strategy is outside range up close, which means this bar engulfs the previous bar. It had a lower low than the previous day and also a higher high than the previous day. The entry was on the next day's open at 1771, and it was a 2-day hold, so I exited on 11/2 at the open at 1781 for a profit of about 0.5%. If I survey the sectors where I have current positions on, it looks like I've got 3 positions in healthcare, 1 in technology, 1 in basic materials, 1 in consumer cyclicals, and 1 in energy. So if I wanted to have a more balanced position set up, I might consider something like consumer non-cyclicals or something in financials. If I look at the sector's insight page, it looks like financials represent the second best sector for long entries, but consumer non-cyclicals looks a bit anemic and biased to short entries, so maybe I should just stick with financial sector opportunities. Today's cumulative market environment most resembles winning long entries for the screens triggering today. What I mean by cumulative market environment is we're summing all the gains and all the losses from the screens triggering today, and long entries had better performance than short entries when those screens triggered in the past. So that's one edge we can stack in our favor for our search criteria. If I look at the cred factor histogram on the Index Insights page, I get a similar bullish or long bias across the indices too. But it's kind of a mixed picture here because if I look at CalMAR ratio and average P&L projections, I just get a mixed message. My last look today is going to be trying to get a loose feel for the broader market setup by looking at the price action of SPY. This is also a bit of a mixed message here as we've started some effort of a bounce from the 10% plus move to the downside, but Friday's action had positives and negatives. The obvious negative was a lower close. The positive was that we probed down and made a lower low than either of the 2 previous bars and still finished in about the middle of the day's range. There's also a little edge we could try to stack in our favor, and that's knowing the seasonality of the days of the week. There's a shorthand I use for knowing the daily seasonality, and that's eat the meat and throw away the buns, meaning the interior days of the week are bullish and the exterior days are bearish. I've tested entering at the open and exiting at the close every day. Over the last 10 years, Monday has been the most bearish day and Friday's been the second most bearish day. The most bullish days have been the middle days of the week, Tuesday, Wednesday, and Thursday. But let me caution you, this is not a system at all. It's just another edge that we can consider. There's a few more edges we could look for in the form of the 200-day simple moving average, the monthly pivot, and the weekly pivot. The monthly pivot has already been touched by price, and the weekly pivot is going to plot below where price closed on Friday. Those 2 elements have a bearish influence. 200 SMA is within an average day's range above price, but what acted as support when the market was above the 200 SMA may now act as resistance as price tries to rebound. A pivot is just the midpoint of the previous period's high, low, and close prices. A pivot for the current month is the average high, low, and close price from the previous month. And the weekly pivot is the midpoint of those 3 prices from the previous week. Sometimes you'll see a price move away from the recent trend toward a pivot and then resume with a trend once the pivot has been touched. You can see that case being made in the month of September on the 7th, where price came down and touched the monthly pivot and then resumed the trend higher. But this is a lot of effort to just try to get a market bias. The stronger consideration is the individual performance of the screens because they're tested without any consideration to the current market regime. So with all these edges to consider, my bias for tomorrow is bearish. But there's enough mixed messages and we've had such a strong move down that my confidence in a bearish projection isn't much more than 50% odds. But I'm going to go with that and look for a short in the financial sector for tomorrow. I'm going to go to my presets, and from global presets, I'll choose peak profit factor, and then I'll add the financial sector in the sector field and short in the direction field, and then load the opportunities table. Now I'll add the number of trades column so I can weigh the number of occurrences with the other metrics. And as I look at the trades at the top of the opportunities table, I'm not that impressed. If I short by robustness score and then look at the CalMAR ratio column, I don't see anything near the top with a score higher than 1, which is my minimum hurdle. If I sort by CalMAR ratio, I get 3 opportunities with the CalMAR ratios above 1, but the highest only has 24 occurrences. And a quick look at the profit and loss chart in the backtest summary report shows a 20% drawdown. So I need to change my screen criteria. I'm going to switch over to the swimming shorts preset and add the financials sector and load the opportunities and then sort by CalMAR ratio. The second opportunity for GNL looks worth investigating as it has 108 occurrences, so I'll view that backtest summary report. And this looks pretty good. It only has a 2% max drawdown and a risk-adjusted return of 93%. So I'll add this as a trade for entry at tomorrow's open. I hope this has been helpful. If you're not using the application yet, come on over to Stocks Toolbox and get registered. If this video was helpful to you, subscribe to our channel to be notified of future updates. Thanks for watching. See you at the next one.